Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures edging higher to kick off the holiday-shortened trading week. Investors still hoping for a Santa Claus rally to close out the last 5 trading days of the year. Plus, gold and silver are climbing to new highs. Rate cut bets fueling the surge, capping off a banner year with gold and silver on track for their strongest annual performance since 1979. And Cleveland Fed President Beth Hammack says she doesn't see any need to change interest rates for several months, telling the Wall Street Journal she's more concerned about inflation than the labor market. Let's get a check-in on stock futures right now. We are seeing indications for a higher open across the board here. The NASDAQ 100 futures leading the gains here, showing an increase of about 0.7% at the open. The S&P up about 0.5%, and the Dow showing a gain of about 0.1% here as we get into the waning days of the year, which tend to be a little lower volume, although we do have a fair amount of company news today, which we'll get into in just a bit. But what we want to do right now is take a step back and look at the year that has been for crypto. Bitcoin hitting record highs and experiencing major sell-offs. Now the cryptocurrency is at risk of ending the year with its first annual decline since 2022. Let's talk more about cryptocurrency and the sort of ecosystem around it, relative value to other assets, all of that. Joining me now to discuss, Michele Schneider, MarketGauge.com chief strategist, David Miller, Catalyst Funds chief investment officer and senior portfolio manager, and our senior markets reporter, Ines Ferré. Ines, I want to go to you on that roller coaster that we have seen for crypto this year. And to be clear, it's not unusual for Bitcoin, right, to see a roller coaster. What was perhaps unexpected is that it would have such institutional and policy support and still see that roller coaster, Ines.
100%. I mean, the Bitcoin community got everything that it wanted this year as far as regulation, as far as a friendly SEC, as far as the administration really going forward with crypto and Bitcoin in general. And yet you are seeing prices that tumbled from the 126,000 level in October, and also calling into question, is the 4-year cycle really over or not? I mean, you had some very prominent voices that were talking about that 4-year cycle being over, but now we are in a crypto winter, so to speak. And what's been sobering are some of the also price targets that have come out from Wall Street, because you had a lot of bullishness going into the end of this year, and now you're looking for next year some sobering calls. I mean, you've got Sean Farrell from Fundstrat that basically is saying that you are going to probably be seeing a drawdown in the first half of the year, and calling for 60 to 65,000 for Bitcoin in the first half, and then you would see a rally going into the end of next year, and Bitcoin reaching 115,000. Now, he says this is for a variety of reasons, but nevertheless, I mean, he got quite a lot of pushback online because of that, because he's been a big bull. But we have seen sort of a changing narrative. I don't think that it was helpful that you saw OGs, whales, selling heavily into this drawdown that we've seen with Bitcoin. That has created quite a bit of negative sentiment for the overall crypto industry.
And Mish, I know you're watching the technical levels on Bitcoin, as you tend to do with a lot of assets. And so what is that telling you about what we should be watching and where it could be going in 2026?
Well, just from a pure technical standpoint, we're sort of trying to scrape our way back over the 200-day moving average if we're looking at Bitcoin. And that would be a move over 91,000. I think that would be a sigh of relief to the bulls. And if we break down under 85, obviously that would be some trouble. And what's interesting about the technicals right now, Julie, is that it's perfectly coinciding with the biggest news that could impact Bitcoin right now, which is that MSCI and possibly the S&P 500 and the FTSE are all talking about the potential of removing MicroStrategy, Michael Saylor's company, from the listing on the S&P 500, that fate could be decided as soon as January 15th. That would have tremendous implications because essentially, and by the way, when that news came out, that's where we started to see the top. That would have, the implication would be, first of all, cash removal of $8 to $9 billion for one. But more importantly, perhaps, is that all this mass adoption that we just talked about would now come into question as institutional investors would basically be rejecting it. Now, this is very political. Some people will say Goldman Sachs behind it. They may have some reasons. It may not even go through. But I think it's something you have to watch. So coiled spring, if it doesn't go through, I think we'll see a massive rally. And if it does, that 65,000 may not even hold.
Well, and the interesting thing about all of that is it doesn't seem to be that MSCI is saying that there's a particular deadline or so we don't even know when it would happen. And it's interesting also because we went from a discussion of whether strategy would go into the S&P 500 to now saying it might be excluded from these various other indices. And it's not just strategy, by the way. It also seems like they're weighing a rule that would affect companies that have 50% or more of their assets in digital assets, these so-called digital asset treasury companies, which have become a trend this year. So it's quite interesting. Ines, meanwhile, we were talking this morning that Strategy's weekly Bitcoin buying announcement this week was not a buying announcement.
That's right. 0 Bitcoin that were bought last week. So again, this doesn't bode well. I mean, the strategy when strategy announces its Bitcoin purchases, it's tended to give a boost to crypto in general. I mean, this is seemed as bullish. But look, to your point, Strategy has been saying they are an operating company. They should be included in these indices, and that these DATs are operating companies, and they kind of speaking for. I mean, they put out an open letter, kind of speaking for sort of the industry as a whole. But there is a case to be made by strategists that are saying that now with this crypto winter, you are going to see a sort of Darwinian sort of era for these DATs, and which can outlast the others, and you could see also consolidation in the space as well.
All right, let's put a pin in the strategy debate for now, because David, I got to bring you into this situation and this conversation, because as we talk about Bitcoin, we got to also talk about gold. Bitcoin's supposed to be digital gold, but gold, physical gold, has done a lot better than Bitcoin this year.
Oh yeah, I mean, it's definitely been a bit of opposites this year. I mean, gold's had a record year, 60% plus, while as Bitcoin, I don't know about the term crypto winter, when Bitcoin's around 90,000 a coin, a couple 100% higher than it was five years ago.
Not what it used to be, I guess.
Right. But you still have this situation where it's clearly not digital gold if gold can have a record year and Bitcoin can be down in the same year.
Do you think that gold is, I don't know how much you allocate even to crypto, but do you think that gold will continue to be an outperforming asset next year?
Long term, I'm both bullish on gold and Bitcoin, but I think it's important to take a little bit of a step back and not treat investing as gambling. I think when people make these predictions of, hey, it's going to go down in the first half of the year and up in the second half of the year, it gets to be a bit of a parlay bet as opposed to something that you can say that there's a really clear reason for. I think there is a very clear reason why gold makes sense in a portfolio, and I also think there's a great reason why Bitcoin makes sense in a portfolio, largely because the dollar doesn't make a lot of sense, because if I owed $38 trillion personally and I was spending $1.9 trillion more than I was bringing in, and I had a printing press, there's a pretty good chance I'd use it. And that long term is both bullish for gold and for Bitcoin, but what happens in the near term is too hard to predict.
And what does gold do for you that Bitcoin cannot?
So what gold does that Bitcoin definitely can't is it's an actual alternative as a reserve asset to a currency, meaning that Bitcoin is really a retail play, whereas gold is very much institutional, meaning that if you look at all the central banks, they're huge owners of gold and they're hoarding gold and they're buying more in a big way to replace dollar reserves because they don't trust the US as a solid ally for many of these countries, especially those that are not allies, to treat them the way that they'd like to be treated, which I'd understand. If I was China and I held 760 billion of T-bills, and I saw what happened to the 300 billion of Russia's treasuries, where we know where those went, I would probably want an alternative. It's just that Bitcoin isn't an actual alternative yet, aside for retail, which makes it a risk asset, whereas gold can really be risk off.
And Mish, finally, I want to ask you, we're talking about gold, we're talking about Bitcoin, we're talking about these digital asset treasuries. What do you think is going to be most attractive across these categories going into next year?
Well, I think you have to kind of choose carefully. So we're talking about Bitcoin, obviously, but there's no doubt that stable coins and the whole blockchain space and the need for cheaper, faster, borderless transactions is a thing. So I think you really have to look there, and obviously Ethereum might still continue to outperform. It started to, and then of course sold off with Bitcoin, but that would be a place that I would be looking at blockchain itself, at any instruments that are related to stablecoins. So right now we have Visa, MasterCard, PayPal, all these companies talking about these borderless transactions that they're using. And then of course I'd look at Ethereum itself, and I still wouldn't discount Bitcoin, but maybe in terms of that be at the bottom. And of course I love gold. I've loved gold for years already. And I love silver. And obviously you have to kind of love platinum and palladium right now, although I don't really trade those metals as much. But I see gold 4,700, maybe 5,000. Silver right now touched at $69 this morning. I was looking at about 75. But these are the moves that are really showing other cracks. And that's why I don't think those cracks are going to go away. So I'm very bullish in the metals still.
Interesting. All right, Ines, thank you so much for your perspective on all of this. Michele and David, you are going to stay with me. We're going to get some more of your picks for 2026. Also coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Welcome back to Morning Brief, presented by Robinhood. Now time for some of today's trending tickers. We are watching Warner Brothers Discovery, NVIDIA, and Clearwater Analytics. First up is WBD and Paramount Skydance. The takeover battle ratcheting up yet again this morning as Paramount Skydance amended its offer. Here are the key updates. Larry Ellison, of course, the father of Paramount Skydance CEO David Ellison, will personally guarantee more than $40 billion in equity financing for the deal. He also agreed not to revoke the Ellison family trust, and Paramount raised the termination fee on the deal to $5.8 billion. That matches the number from Netflix. What do these moves do? They basically resolve some concerns that WBD's board had regarding Paramount's original offer, but Paramount did not raise the overall offer price from $30 a share. Next up, NVIDIA. The stock is higher ahead of the opening bell as the company is reportedly gearing up for shipments of its chips into China next year. Reuters is reporting that the chip giant's in talks with clients to start shipping out its H200 chips by mid-February. Despite these plans, there's still, of course, plenty of uncertainty. Beijing has not approved any purchases yet. And finally, Clearwater Analytics. It's a merger Monday on Wall Street. Shares of the software company Clearwater, they are going private, soaring on news that they're going private. Private equity firms Permira and Warburg Pincus are leading the group in the deal. It's valued at $8.7 billion. And Clearwater shareholders will get $24.55 a share in cash. That's a 47% premium from its share price on November 10th. That's the last trading day before the first reports of deal talks. The deal is expected to close in the first half of 2026. Well, there's just a handful of trading sessions left in 2025, so let's look ahead to 2026 and which sectors and stocks could wind up in the winners column and others that might not be so lucky. Back with me, Michele Schneider, MarketGauge.com chief strategist, and David Miller, Catalyst Funds chief investment officer and senior portfolio manager. So, Mish, just big picture, is your screening or kind of your framework changing, if at all, for 2026?
Well, I know I'm not the only one to say this. Hard assets, of course. I mean, we're seeing what's happening with the metals and how that's going to matriculate into other hard assets. I have not discounted agricultural sector, which has been under a lot of pressure, but yet we're seeing some nice moves this morning in soybeans, for example, sugar back at 15 cents. I think you have to keep your eyes on all of that. And you can look at DBA, which hasn't necessarily broken out, but has potential. Also oil. I mean, right now, everybody in the world seemed to be so bearish based on an oil glut, but yet here we are almost at $58 a barrel, not just because of the Venezuelan situation, but that could also wind up being more of a theme as the rig counts have gone down. And then beyond that, of course, Julie, I know we've talked so much about the vanity trade, but I still think that may be one of the hottest themes, and biotech in general. But looking at the diet drugs and looking at some of the consumer habits that occur because of the fact that there's been a lot of weight loss. I still like semiconductors and some of that space. I'm looking more into other types of more infrastructure aspect of that. I mean, you can't, of course, discount NVIDIA, but even cloud computing coming in, or some of the other type of infrastructure plays like Hut, for example, or Teradyne. And then beyond that, really, I'd say those are my main, but robotics, I like Serve. Obviously, space now is back hot. And energy play, I think nuclear had a nice sell-off if you're looking at uranium, and that could come back as well.
A long shopping list for people to look at for next year. David, I want to bring you into this because I'm curious for you too. Are you is there anything that you're sort of adjusting in your screening process for next year, given what you're expecting?
Yeah, well, really what I try to figure out is where are the layup bets? Where are the things that are almost definitely going to happen because they're already happening? So I guess there's a few areas where I'm looking for that. One is these secular growth stories. It's a little confusing what's going to happen with the big picture, but an area like healthcare, for example, doesn't change as much with economies. So if you look at a company like an MEDP, for example, they're a CRO. They make it much easier for
CRO.
Yeah. So what they do at Contract Research Organization, they help biotechs go through the process of all of the FDA trials and facilitate those processes, and they do it at scale for many companies, which makes it cheaper, makes it more efficient, makes it just a much more efficient process. And it's a great margin business, and it can keep growing. So that's an area I like.
Gotcha. And then Transmedics is another one in the medical, obviously, category. Why that one?
Well, Transmedics is a really cool business, especially if they can accomplish their end mission, which is to create this end-to-end full ecosystem for organ transplants. Organ transplants had high failure rates. The transport hadn't been very efficient. Sometimes they just have to throw out perfectly good organs because they weren't transported in a safe way. They're building the whole ecosystem from point to point and making it a far better system. Their company is growing exponentially. Clearly, someone is willing to pay up for an organ that works and have their transplant work. It's pretty much, real life or death. So I think Transmedics could be a huge growth story over the next few years.
Yeah, it's interesting that you guys both have sort of medical picks, but in different areas. I mean, just one quick follow on Transmedics. The stock, doubled this year already?
Oh, yeah.
So I understand the appeal of finding something that works that you think will keep working, but at one point, does that sort of thesis get priced in, or do you get concerned about that?
When the earnings don't keep up. But when you look at Transmedics, their revenue growth has been exponential, their earnings growth has been exponential, so it's actually not getting baked in the sense that they keep putting up consistent exponential revenue and earnings growth, and there's no reason to think that's going to stop as long as they can actually create that end-to-end system for organ transplants.
Gotcha. Mish, I want to come back to you on one of your medical picks, which I believe AbbVie is one that you've liked for a bit here. That one isn't one, I don't think they're in the obesity game as far as I know. So what's the thesis there?
Well, twofold, really. They're not in the obesity game per se, but there is Botox, right? And that has become more and more popular and will continue to become more and more popular as a means to deal with skin issues that happen when you lose a lot of weight. So that's more in the vanity area, but it also obviously does a lot of immunology. So yeah, AbbVie had a really nice move this year in 2025 to the point of, can it go higher? It's been in this massive consolidation right now between 220 and 228. And I think this has a lot of potential to make much bigger highs as we go into 2026. And picking up on David's point, right, I like some of the other type of stocks that have done more antibody drugs like Replimune, and also ADCT is another one that's working on immunology through antibodies, which is a different way to treat disease as opposed to just dealing with the symptoms of it. So all of these are very exciting for next year.
And Novo Nordisk is one that obviously that one is in obesity, very much so. But of course, it's sort of fallen behind Eli Lilly. So do you think this will be a comeback year for them?
Well, this is where I think, Julie, I mean, you can't deny the company has a real future, but you got to watch price on this, right? You look at Eli Lilly, well over 1,000. You look at this, it's hovering around 47, 48. Can't really seem to get back over 50. So I think if you see a breakout over these more recent lows over the last couple of months, that is an indication that things are starting to improve.
And David, just finally to you, healthcare in general, do you think that, I mean, we've talked to a lot of investors who say they think it's going to come back and sort of outperform more next year. Do you share that broader view?
I do share that more broadly, but I think especially in healthcare, it's very important that you pick your spots because I think health insurance companies might be a bit under pressure. The benefits that they got from the enormous subsidies from the ACA aren't necessarily going to be there in the future, whereas these companies that are more the picks and shovels that facilitate the system of healthcare, that can pass through price increases for absolutely necessary mission critical services, I think those are the places you really want to own in the healthcare ecosystem.
Gotcha. David, thanks so much. Mish, thank you very much. Happy holidays to both of you.
Happy holidays. Thank you.
Thanks. Coming up on Yahoo Finance's opening bid, our executive editor, Brian Sazzi, is with us now. Saz, what is coming up today?
Julie, before I even get to my show, I mean, I'm an avid viewer of your show, of course, as you know. Is there a company throwing out organs? Did I hear that right?
That is what David Miller is just saying.
That is like
because of issues with organ transport, he said that can happen.
I mean, we connect after the show. But as for me, I can't top that, but I will try just a little bit. Circle CEO Jeremy Allaire hopping on the show, and we're talking about the future of stablecoins, Julie.
There's a lot to talk about there, Saz. Looking forward to hearing that.
Yep.
And that does it for Morning Brief, presented by Robinhood. Much more ahead on Yahoo Finance.